Good morning. We're very happy to have you on the Paris Private Equity Summit. Welcome to our very exciting roundtable. We're going to discuss a very hot topic this morning, the key challenges faced by the private equity industry in Europe in 2021. We are very pleased to have gathered three top panelists for you this morning. I'm going to introduce them to you very quickly. R.Koetschet, you're head of fund investment, private equity at Caisse des Dépôts and Consignation. You're sort of the LP's representative on this roundtable. N.Marien, your partner with Astorg. You are the GP side, if you let me put it this way. And D.Gaillard, you're head of France Invest, the private equity fund association. And I just mentioned that you also very recently joined Caisse, another general manager, very well anchored in France. So we are going to discuss, as I was just saying, the key challenges the industry is facing now. As you're all aware, some of these challenges have been obviously linked to the COVID crisis, but some of them are sort of pimpering for a few years now and are accelerating in a current context. So without no further ado, let's start the discussion. And we obviously going to start with a very obvious subject for all of you, which is the valuation. Raphael, what is your view on the dynamics of the valuation between COVID-resilient assets, not COVID-resilient assets? And as we were saying, just discussing before we went live, there's also still this bubble feeling in the market. Everyone's talking about the bubble. We see prices going very high. Is this a current view?
Yeah, well, that's definitely the elephant in the room and the main area of concern that many of us have. Sky-high prices is probably the main challenge currently facing the GPs, if you ask me. I mean, obviously, the market is very polarized, meaning that, generally speaking, deals that are being done are, for the vast majority of them, being done in COVID-proof sectors, i.e., enterprise software, healthcare, and hence prices keep increasing. The issue with that is obviously that the margin of error for the GPs is super thin, and that to achieve the same level of performance as before, likely without a positive multiple arbitrage, GPs need to work differently, more systematically, more quickly, with more sector expertise, and so they need to invest in their organization. We see this phenomenon on both sides of the Atlantic, but I have to say it's somewhat stronger in Europe, and that's probably why the prices that we see on benchmarks are actually higher in Europe than they are in the US. And we believe that this phenomenon is likely to continue, at least in the coming year, given the fact that a lot of GPs are currently working on the exits of their COVID-proof assets to de-risk their funds, to crystallize the RR, knowing that they're going to need more time for the non-COVID-proof assets. So, and although equity cushion remains pretty high and healthy, leverage multiples are also creeping up, especially in the US that time, which is also an area of concern. I mean, I think that the question for us is, where do you believe the best returns will come from over the next 5 years, and whether it is the time or not to address the value markets and the kind of outside of the box deals.
And so what you're also saying is that actually the valuation level we currently see are sort of only a partial picture of the market, only reflecting the deals that are being done, because other deals are not pursuing because they can't find any buyers, so to speak. So it is not an accurate picture that we can see there on the valuation market.
Yeah, exactly. I think you need to be very cautious when you look at benchmarks those days. They don't mean much. I mean, you have to dig deeper and to see what deals they refer to. And so, a lot of attention has to be put in that, and just don't just read the headlines, right?
Nicolas, Raphael was mentioning obviously these very hot markets and sectors, including software and healthcare, where Astorg is obviously a big player. Do you see a lot of competition, and what kind of competition between players do you witness on these sectors?
I mean, indeed, the competition is very strong on those two sectors. But I mean, I would say it's also the case in industrial businesses or in business services, which have been proven COVID-proof as well. Looking at software or healthcare, it's not unusual to find valuation multiples which are like above 20 times or even 30 times, which was the case, for example, on Calypso that we looked at, and that was.
You're talking 20 times EBITDA.
Yeah, 20 times EBITDA or 30 times EBITDA. More and more, we see also like big players from the US looking at European targets, so especially in the software space. We have to deal with this new environment and to do more and more due diligence to really select our investments and find all the upsides that are required to do a good deal at the end of the day. Looking at outside of healthcare and software, there are other industries which have proven to be COVID-proof and which also deserves, very, very high multiples. So I think the COVID crisis has helped to, let's say, to sustain the valuation multiples, which were very high also before, and we'll see in the coming years. If we'll see a decrease or not. It was not the case over the last 10 years, so I do not anticipate any decrease.
Any decrease on the prices. Dominique, so Nicolas mentioning these sectors, player from the US, intense competition. So we have the feeling that between LBO and growth capital, the frontier is being more and more blurred. Same with infrastructure. Do you agree on that? And what impact does it have on valuation from your perspective?
Well, that's true. It's a phenomenon that we observed, at least between infrastructure and the buyout world, observed starting in 2007, 2008. So it's quite a long phenomenon, but it's becoming more and more present. I don't know if you remember the famous French investment in Astorg, the water utility, which was a vertical in which historically it was a business for buyout players, and suddenly in 2007 it became a business for infrastructure players, and that's when it started in France. And progressively, these infrastructure players are becoming less core infrastructure player and more core plus, and verging to the buyout world. And a good example of that is the recent investment made by Infravia in the campsite business, Sandaya, which was obviously looked at the same time by buyout players and infrastructure players, and ultimately infrastructure player won. Similarly, as Nicolas was mentioning, you have seen late stage unicorns, especially in the fintech sector or in the software sector, where usually it was the venture and the growth players were in command. And now suddenly some of the buyout players are becoming interested to acquire these businesses because they value more the growth of the business than the profitability. And so, yes, the buyout players lost certain verticals to the benefit of the infrastructure players, but on the contrary, they extended their word of interest to the growth segment.
So that's the deal making perspective and the valuation challenging the GPs and the LPs, because it's all about performance, have to face in the end. What about the fundraising market? Raphaël, you said at the beginning of this conversation that the deal making was very bipolarized between good assets sort of thing and assets that struggle more. That's kind of quite the same for the GP. We see GPs raising money very quickly, very efficiently, and also struggle more. Do you think that this trend is here to stay, especially in a world where there would be no face-to-face meeting for some time? So how does that all impact your investment decision?
Yeah, restrictions on travel means that the normal ways in which funds have historically been raised with, face-to-face discussions, formal, and I have to say equally important, informal, the development of relationship in an industry which is very much people-driven were completely altered. That being said, the appetite for the asset class is obviously still very strong. The numbers regarding fundraising in 2020 look almost the same as what they looked like the previous year. given the performance of private equity, the low volatility that it has demonstrated, the willingness of LPs to avoid the stop and go this time, the lack of denominator effect, and frankly also the level of distributions that us LPs have received over the past years. Within Caisse de Dépôts, we've actually had our record year in terms of investments in private equity in 2020. But if you dig a bit deeper, there again, in the numbers, it becomes pretty clear that similarly to GPs, LPs are also navigating in a very polarized market, as you were saying. But the pandemic has actually accelerated the trend towards higher manager concentration. The complexity to assess a fund that is being raised is increasing, and even if you put the pandemic aside, generally speaking, the holding periods are increasing, funds are being raised earlier than before, valuation methodologies are kind of all over the place, fund sizes are often doubling, and performances are harder to assess with the use of equity bridges or other similar financial engineering tools. So if you add COVID to that, without being able to physically meet a team, visit their offices, assess the team's dynamics through body language, it's way easier to re-up with a GP or to invest in the new product launched by a management company that you know well, rather than committing to an emerging manager. And in 2020, we could still leverage to some extent on the physical meetings that we had before, because sourcing as an LP is a long-term plan. But it's truly not the case anymore in 2021. So buyout platforms are branching into credit, into infrastructure, into real estate, into smaller funds. And that is a trend that we believe will continue. And that's partly also because of the rise of the GP stakes market that will be instrumental to address GP commitments for larger funds, the succession issues that will need to be solved in our industry, and so on and so forth. And so GP stakes aren't that common in Europe yet, but I'm pretty convinced they will be, considering what's taking place, in the US and what has taken place for a number of years now. And so they will also push for the launch of these new products. The question is, beside the performance of these kind of non-flagship funds, around the possible shift from a boutique to more asset manager mindset. And so obviously the questions around the alignment of interests, i.e. carried versus fees, that's something that we will be very focused as an LP.
Thank you very much, Raphaël. Dominique, as the head of France Invest, I would like to hear you on those trends. Raphaël mentioned the concentration of capital, the rejection or somehow of a relationship in the portfolio. What room does that leave for emerging manager and first-time team? We have quite a few on the line in France. So do you think they will succeed? Dominique, do you think the shift toward rejection of portfolio also will be sort of a hurdle for the emerging managers?
Well, it's true that 2020 has been a difficult year for fundraising for these first-time funds. That's clear. What was good is that a lot of them went on the market before the crisis. So for the ones who were already on the market before that, they managed more or less to finish their fundraising, maybe not to the level at which they were expecting to close, but they managed to survive and to go for to become live. It is true, Raphael is right. In this year 2020, a lot of LPs have been concentrated on re-upping in a manager that they knew, so it will be difficult for first-time fund. On the contrary, there is now quite a lot of data has been available on the market. We show that first-time funds demonstrate very good returns. And so compared to more classical, more historical players, some LPs want to bet on some new players because of this appetite for differentiated return. So it's a balanced view. Now, on another subject, I wanted maybe to stress that 2021 will probably be the year where there will be a strong development of solutions targeting private individuals to be incorporated into the private equity world. Some of them are quite frustrated to see that you have to be in our world to be a potential LP in some of the good funds. And so there are numbers of initiatives right now on the market to try to attract and these private individuals towards the asset class, and especially through the life insurance funds, where some solutions are being structured and put in place and marketed today.
Because we've heard of that sort of temptation to get that private individuals' money for quite a long time. We've seen in the US big asset managers sort of succeed in raising that type of fund, but in Europe, it's always been a little bit so-so. We haven't seen many GP sort of succeeding in doing that. You think that now the shift is really in our side on the cards?
Well, it's true that in the US, they've been helped by the 401k retirement plans. So there's a channel to fund equity through that mechanism, which is not available in France, in particular in Europe. But I think that if we want to have a big mass of money coming from private individual, you have to train the sellers of these products, these private equity funds, because it's much more complicated to sell a PE fund than to sell a real estate fund. So if this education is not done towards the insurers, towards the private bankers, then the volumes will be limited. So at the France Invest, we try to put in place some formation, some apprenticeship towards this category of people, so that they are at ease to sell these products to their customers.
Thank you very much. So we've talked about the deal making, the fundraising, the relationship between GPs and LPs. So I would like to ask you, Nicolas, how do you think this COVID crisis as a whole has changed the way GPs work? Has it changed the way Astorg works? Which kind of relationship have you built up with your portfolio companies? How have you kept your LPs in the loop when the crisis struck? What has changed there? Is there anything different?
It's a very good question. I think we have learned a lot from other crises we had in the past. And I feel that all our industry has been very, very reactive when the COVID started in early 2020. So, I mean, there were all those, measures in place, lockdowns and so on. And we had to deal with this situation, which was completely new. So obviously, from the monitoring side, we were very, very close to all our managers in order, to understand what we can do to support them in this completely uncertain situation. We had to close plants. We had to do home office. We had to deal with all these measures from the government and with the uncertainty on how to implement those measures. So I think what was key at that time is to have daily conversations with our CEOs, with our CFOs, to understand what were, let's say, the key topics on the agenda, and to help them on, financing, on operations, on, how to deal with the banks, with the reportings and so on. So I think those kind of relationships we built during this crisis was very key to support the business, to support our people. We're quite alone. Managing their businesses. On the LP side, that's true that it was also key for us to demonstrate our capability to adapt and to be super agile. So we have been able to produce, let's say, new reporting formats very quickly to our LPs to explain, what are the new targets for 2021, even if it was a bit uncertain. What were the KPIs that were key to...
Yes, Hello? So Nicolas, all that to say that when the crisis struck, you were really hand in hand with your portfolio companies and with the LPs as well. Do you feel that this need for closer contacts is still here right now? Did they get used to it? The CEOs and the LPs, are they still willing to talk to you?
So I mean, obviously, I mean, oops, there is a second voice. So obviously, we'll continue to have, I would say, closer relationship with both portfolio companies and LPs. That's very key. Then compared to like March 2020, I think the need is a bit different. We have learned how to work with this COVID.
We seem to have, I don't know if that's the same for the audience, but if we look a bit strange right now, it's because we have this background voice of the organizer. So when we try to talk at the same time, it's a bit disturbing. We will keep going, not knowing whether you can hear him or not. So follow through, Nicolas.
So compared to March 2020, I feel that we are now used to, to this new setup. We have learned how to live with the uncertainty. So obviously we have closer relationships compared to what happened in the past, but I feel that the need is a bit also lower compared to 1 year ago. On the LP side, I mean, obviously now we are working on a budget 2021, which is based on this new environment that we know a bit better, even if depending on the various countries, the situation is different. But I think we'll continue to adjust the reporting format and the financial communication with our LPs to be really adapted to the situation.
Okay, thank you very much, Nicolas. Raphaël, Dominique, just one quick comment so we can move forward. Nicolas said that he found the GPs reacted very differently from the 28 crisis. Do you share that view, Raphaël, from the LP perspective?
Yeah, I mean, very much so. We've been, very pleasantly surprised by the level of depth communication that we received from the GPs that we've invested with, to Nicolas' point, and which has enabled us to assess how quick and irrelevant the actions that were taken were. And the responses have been super quick, with the management of liquidity kind of starting immediately. And so, yeah, we definitely agree with Nicolas.
Dominique, would you like to add something?
Well, just one word to say that all the GPs benefited from the experience of 2008, and to be very quick to implement the same kind of a mechanism that they took weeks and months to establish in 2008, and this time it took days to establish the same kind of mechanism to discuss with their management.
Okay, thank you very much. I've got two questions now because I can see time is running out. So let's do it quickly. Always related to this way of working for GPs and kind of conversation they have with their counterparts. Can we say a word about management packages, Dominique? What is the trend there with the COVID crisis?
I really think that we will see exactly the same phenomenon that we observed in 2008, 2009, which is depending on the sectors, the COVID-free sector or the COVID-damaged sectors. For the COVID-free sectors, you have seen a lot of businesses being sold quite quickly because GPs understood that they would be stuck for many years on the COVID-damaged sectors, and so they anticipated the sale of the other businesses. And so for these businesses, clearly the management package will be excellent, and there is no need to renegotiate them. On the contrary, on the sectors that have been damaged, clearly the initial business plan that were discussed with managers are going to be obsolete, and so there will be a need before the sale of these assets in 3, 4, 5 years to re-establish a credible management package being positioned on a credible, renewed business plan. So there will be some renegotiation of this management package on these kind of businesses.
Thank you very much, Dominique. Another risk I would like to stress now is about cybersecurity. So, Nicolas and Raphaël, I would like to hear you on that one. We all know that this risk, needless to say, is really growing. How would you address it, Nicolas, within your portfolio companies? Is it really well identified and plans for readiness in case of attacks?
Yeah, it's really well identified. I mean, a couple of years ago, it was not a risk that we wanted to assess during our due diligence, and we thought it was very, very remote. Today, either when we do a deal, when we complete a deal, or during the monitoring of a deal, it can happen. I think many of our competitors and also us at Astorg, we had to deal with, this topic. So, what we have decided internally is that at 10.3, we need really to interview the management on this topic, to do our own due diligence, our own risk assessment, in order to have a specific roadmap and to implement measures at the very, very beginning of our investment to avoid any risk. I think it's very key, because when it happens, it can really, really be difficult for our business. And usually our managers, our CEOs are not used to deal with this kind of situation. So it's new, and that's typically the kind of support we as GPs, we can help our teams, our companies.
Raphael, is now the cybersecurity area a real field for due diligence? Do you really look into it? I'm saying you as the healthy community as a whole.
Sure. Well, it's something that we are beginning to take very seriously, to Nicola's point. And I think it is an area where we don't spend enough time on, to be honest. And so I'm convinced more attention will be put into cybersecurity diligence from LPs. I'm not sure it is so much the case already, but it's definitely something that is going to evolve pretty quickly, I think.
Okay, room for progress on that one. So let's keep moving to another subject, very different one from what we've talked since the beginning of the conversation. But again, another elephant in the room is the SPAC frenzy. This is a challenge that you guys from the private equity side have to face. I'm going to ask you a common question to all of you, and whoever wants to take it. Do you think SPACs are a threat or an opportunity for private equity players, or even so for the private equity model? You have 30 seconds each on that one.
Maybe if you don't mind, a word on what happened in the US, because basically, as of today, except for Italy for very specific reason, there have been very little SPACs on the market. I think there are 3 in France only, and very few of them in the UK. So it's so far a US phenomenon. It would probably come in France, but
they're coming.
They're coming, but they would be probably coming with more regulation and a correction of what has been understood now by the SEC, by the IMF as abuse of the systems and some bias in the system. For us, for private equity players, so far it has impacted the growth world, the venture and the growth world. Very, very few SPACs have acquired classical companies under buyouts from private equity portfolios. It's mostly venture and unicorns, where the appetite for the growth prospects is interesting for the SPACs promoters. And I understood that many of the French unicorns have been regularly called by managers of US SPACs to be the target of this SPAC. So clearly, it is a phenomenon that we have to take into account. To what extent it will really mean some exit routes to a French venture player, this has to be seen.
It's too early. Raphael, would you like to add something on that one?
No, I think, the discussions that we've had the kind of past couple of months with VC funds definitely echo what Dominique has just said. They were saying that they don't have a dual track anymore, but they have three tracks now. And so I think there is a clear market need in terms of, having a speedier and more certain way to take a company public. But and the SPAC success rate in finding deals seem to be improving a bit. But then obviously the con is obviously the economics that benefit the sponsors, and the performance of those SPACs still remain to be seen.
So we'll see that we'll keep looking and see when they really arrive in Europe, what kind of regulation, as Dominique was saying, what will be put in place to sort of streamline the way they work. The last topic we're gonna have during this conversation is about ESG, because this is obviously another challenge in a positive way the private equity has to face. We all know that the awareness to take into account the E, the S, and the G is really growing. Two questions there. What has really changed on that perspective from your side? And where is there still room for improvement? Where are we lagging behind? Who wants to take it? Raphael?
Well, I can start, yeah. So obviously within CDC, ESG is very much central to our strategy, and as it is often the case when you talk to European institutional LPs. And I remember the discussions around ESG 8 years ago were definitely not easy, to say the least, and I have a few anecdotes on that front, and especially with the US GPs. And certainly a lot has happened since then, and obviously we were concerned at the start of the pandemic that ESG would be forgotten. But it was quite the opposite, as we all now kind of COVID-19 put ESG in the spotlight. I think there is a clear shift from the kind of the tick the box approach, or kind of reporting approach that needed to be done to please the LPs to actually ESG can help us create a value mindset. And so let's spend some time and effort on that. Consumers are increasingly attracted to companies that they believe act responsibly, and ESG improvements is actually something that creates financial value when you want to sell a company. And so I think it is something that is now taken into account. Most LPs use ESG performance indicators in making investment decisions. And though it was a European thing until recently, a number of big US institutions are now firmly on board, meaning that ESG is becoming a central factor to raise capital. So it's still early days for ESG to some extent, and even leading firms are still figuring out how to handle it properly. For me, embedding ESG along the private equity value chain from due diligence through ownership and exit is key, with a value creation strategy specific to the company, and also, and that's something that we don't see very often, by engaging investment professionals through their financial incentives, for instance. So getting better at ESG relies on continuous learning. I think a clear set of measures must be established and kind of consistently tracked year over year to provide empirical evidence, and we don't see that very often either. So things have changed, and that's a good thing, but the room for improvement, as you were saying, Emmanuel, is certainly there. For instance, around profit sharing beyond top management, which, by the way, creates financial value by motivating employees, but also around diversity and inclusion, obviously. Think about the impact that the industry could have on the whole economy if they were to tackle the D&I issue across their underlying companies.
Thank you, Raphael. Dominique, would you like please to react maybe on the diversity side of things and also on the sharing of value, because you have put in place with France Invest a very key mechanism on that.
Yeah, sure. Thank you. On diversity and parity, as some of you are aware, we have created a chart on parity, and this chart has been signed by 80% of the members of the French association. So 80%, it's more than 300 players. So it's really massive, and they're committed to quite strong commitments in terms of increasing the percentages of women in the industry at all levels. So that's really good, and we'll see the benefit of that in our next barometer in 2 weeks from now. So it's moving ahead. In terms of value sharing, you might remember that in the law called Loi Pacte in France that was voted 1.5 years ago, we pushed for an amendment that was allowing a very tax-efficient mechanism to transfer part of the capital gains made from the shareholders to the employees of the company, and without the employees having the necessity to become shareholders. So this has been really hardly negotiated with the state. It has been in the law now, and now it begins to be implemented in some of the buyout transactions that have been occurring on the French market. But more importantly, maybe to complement what Raphael was saying, 10 years ago, ESG was already quite in the mind of all GPs and all LPs, but ESG was considered as a costly constraint that you have to do, but it was costly. Now, there are a number of data sets which show that if you apply an ESG policy in your businesses, that will increase financially the value at exit of your businesses. So that is another motivation for GPs to implement this ESG policy because that's also aligned interest with better returns.
Nicolas, would you like to add something on the ESG side? What have some of the initiatives you've done with Astorg or your more global view on the subject?
Yeah, I think we used to be like reactive on this topic, and we are now all proactive, which is much better because now we are in a position really to find good ideas to contribute to the value creation and to help our companies. So I think now it's part of all our processes, both on the deal making side, on the monitoring side, and at exit. At entry, when we look at a company, ESG topic is one of the key discussions we had with our investment committee. So we have to deal with potential risks and opportunities we'll find in a deal. And when we have done a deal, we have to define specific roadmaps on ESG with KPIs, targets that we're going to monitor on a yearly basis, really to improve some, let's say, specific ESG topics during the life of our investment. So I think it's really key in this topic to be proactive and not to be in, let's say, in the tick the box mindset.
And have some ideas and reflect on what initiatives you can get. So this roundtable is coming to an end. We have a few questions that popped in from the audience. So I would like to address the question to you, knowing that in 5 minutes at 50 shops we need to close. The question is a more, a macroeconomic perspective than the one we've discussed so far, which is good. That would be a good complement to our conversation. It's about the post-COVID recovery plans supported by government, and the question being what private equity do to be part of these recovery plans. We're not talking necessarily about France, but more globally in Europe. Do you think private equity industry are the role to play to support companies to navigate through the crisis and exit this crisis?
Is that for me?
That's for you, or that's for Raphael? I think the LP side is interesting as well to see. But Dominique, you've got this initiative, France Obligation Relance, that you've worked on for 1 year. So maybe that's a good way of sharing.
This is that we analyzed 1 year ago now that post-COVID, there will be probably a need for a mid-sized company if they want to implement their CapEx plans. There will be a need to reinforce their balance sheet. And so we created a mechanism which allows these companies to receive quasi equity in their balance sheets through what we have called in France Obligation Relance, which benefits from the state guarantee. So that is quite appealing for investors, in particular insurers, because it's considered by them as a non-risky business because of the state guarantee on potential losses. And this plan is to help 2,500 companies within 18 months to reinforce their balance sheet, to promote CapEx, and this will be distributed. We estimated that we are able to raise 6 billion euros through this mechanism, and that will be distributed by the PE players in France to all these mid-sized companies.
So that's a lot of capital to deploy in 18 months to many companies regarding the number of enterprises that are PE-backed in France.
And clearly the goal is to convince some family-owned businesses which are sometimes reluctant to have PE players on board as pure equity players, to try to help them, to convince them that through this non-dilutive mechanism, we can provide to them advice, help, without taking a big share of their equity. So that's a way to increase the market addressable by P players. We hope that.
Yes. Okay. Very good. So support without any dilution, to put it this way.
Exactly.
Raphaël, your view, very quickly, in a nutshell.
Well, in a nutshell,
as LP.
Yes, as an LP, I think it is pretty clear to us that private equity has a very big role to play in the kind of relance. And I was saying that 2020 had been our record year in terms of investing in private equity within Caisse de Dépôts. That's also because we played that role and we were convinced that we needed to play that role, and especially around some sectors that needed more equity injections around, tourism, around healthcare. So yeah, it's definitely a very big area of interest for us, and we're working heavily to inject capital through private equity to the economy.
Without stop and go. You said that at the beginning of the conversation. So that will be the conclusion. Thank you very much for sharing your view in a very transparent and nice and smiling way. I hope that warmed the audience for the rest of the PE Summit. Have a good day. Have a good conference. Raphaël, good luck with your following panel. I think it's at lunch break. We'll try and dial in to support and listen to this panel as well. Thank you very much, and have a good day. Take care, and thanks for your attention.
Bye.
Bye.
Bye.